Hey everyone, it is Evan here from the Trade Risk on Tuesday, January 8th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump in here to our technicals dashboard, take a look at what's going on. Market's off to a good start to the week. For the third week in a row now, we do find ourselves bouncing off of those extremely oversold conditions that we were met with towards the end of 2018. If we look here at the performance on Tuesday, you can see all of the major averages up just about 1% on the session and posting some nice 5-day gains. We have reclaimed the short 10 SMA right across the board. We are above last week's highs, so the bulls are still in control here of that short-term momentum. When we look down here at the sector's performance, you can see we still have biotech leading to the upside right now, energy relieving itself from its extremely oversold conditions, oil has been bouncing as well, and right down the list we can go. Semis a little bit reluctant here on the end of or on this recent leg of the forward progress. Semis were leading to the upside, or at least resilient in the face here over the past couple of weeks, but we can see that slowly changing hands as it sits here at the bottom of at least the 5-day performance. Something to keep an eye on, but notable that the semiconductors are down there. And when we look at some of the other major markets, we do see that energy bounce led by oil here. Junk bonds, high yield, really getting a nice rally as well. And then you have basically equities that follow and volatility down here at the bottom, off 20% in the past 5 sessions. So let's jump into the charts now of the S&P 500. This is the weekly time frame. We're up 1.64% so far at the time of recording this on Tuesday. It's not the end of the week yet, but we can see here we've staged a nice rally off of these lows. In fact, we're about 10% off of the lows now in the S&P 500. So pretty remarkable turnaround here in the past 3 weeks, doing a great job, like I said earlier, at repairing and bouncing off of those extremely oversold conditions. But notice, even though we have bounced 10%, this is something we had mentioned in the past couple of videos, we still haven't, at least from the weekly time frame, haven't really repaired any of this more significant technical damage. We are still below the majority of last year's range, 2600. That's where things really get interesting. That's where the scene of the crime really started to accelerate at the end of December, mid to end December, was around this 2600 level. And you can see at this point we are quite close to it. It seems like an eventuality, or the destiny that the market has to retest 2600. It's only about 1% away at this point. Of course, we could just continue to, we could just suddenly roll over from here. Maybe we saw the highs today on Tuesday, but it's likely that this momentum wants to maybe get back into this 2600 level and see how the people are feeling. The old traders at this 2600 mark, which had put in a good support in this market for almost the entire year of 2018, and we'll look at that closer on the daily charts in just a moment. So when we look here again at the weekly chart, you can see of the S&P 500, 3 strong weeks that we've rallied back, and it's essentially getting back and recovering this final week of the year. Take a look at how painful that last year, of course, it's all fresh in our memory, that 7% decline there in the S&P 500. We're essentially getting back towards the highs there, which was the 2600 mark. So that's where we're going to want to pay attention to, and we'll notice that the MACD is starting to at least try and inch higher here. It's stopping its downward slide, which it's been making new lows throughout the past month or two. So if we go down to a daily chart now, what the first thing we can notice, and we'll go down to the we'll switch over to the SPY ETF, and we'll switch over to my other board here, a little more busy, but you can see that this 253, which we broke above and started to close above yesterday, was the old highs from February of 2018. I'm sorry, the old lows in February of 2018. We did recover that, and like I mentioned, 260 into this 263, the lower 260s are where things get a little more interesting from a prior supply standpoint. That's where a lot of support support was previously found, and it'll be interesting to see how the market reacts a few points higher from here if this trend can continue to the upside. Now, or if we start talking about some of the negative things here, we've already talked about some of the structure here hasn't changed on the weekly chart. We're still in a downtrend despite the 10% bounce, so that of course still keeps us on negative watch in terms of that fact. We also still have, which I think a lot of sellers are pointing to right now, is we have declining volume on this bounce higher. So in other words, we saw this nice heavy selling over the course of December, and now it's followed up by some fairly light, besides, if you were to remove essentially the 26th of December, we had a high volume 5% up day there. But if we just take a look at the rest of this move higher, you can see volume has declined on this bounce. That is something that I think sellers are going to point to. And of course, we are just, naturally extended here in the short term. We've covered 10% after a real big beatdown, and we're coming back into prior supply, declining moving averages. It's the perfect storm, in theory, for the rollover or for the rally to fail. If there are a lot of eyes on it, you have to be suspect. It may not be as clean as maybe everybody wants it. Perhaps it persists longer. Maybe we get, a bigger retracement and overshoot. Maybe we move sideways, we take our time, and we really kind of draw this out. But in the short term, it's tough to want to be the marginal buyer at these levels. The reward to risk is of suspect here, but of course it depends. It's a general statement, so it depends on your time frame, your strategy, what you're looking to achieve. I think in the very short term, as I say, that short-term momentum maybe continues into that 260 area, and there's a few more points left in this rally. But as a step back from that, if you're looking to initiate new longs here for a move for the next week or two, or 3 weeks or 4 weeks or a month, I'm not sure we're getting the best reward to risk here. But of course, again, that's going to come down to your strategy. So I think there is some caution is advised here as we have extended ourselves in the short term, but we'll need to see how this market plays out. We have earnings coming up soon. Earnings season will start to kick off, and maybe we don't get any serious movement until we start to get more clarity from some of these earnings announcements. If we do start to see more Apple-like warnings from some of the big tech and some of the mega caps out there, that is certainly going to put a damper on this rally, on the mood of the market, if we do get more warnings and potentially downgrades in the outlook of companies. So that's something we'll need to pay attention to. For now, the market has shrugged off the Apple, there's a lot, that's a whole nother can of, that's a whole nother set of analysis there. Apple was down 30% or more into its downgrade of its earnings forecast. So there's something to be said for price catching up with some of the news there. But regardless, I think earnings is going to be an interesting one. So let's pay attention to that, which is up and coming. And I think that's about everything I wanted to say on the major markets. We'll look at volatility, which is down to a 20 handle now. So we were 35 plus at the end of December, and we've seen quite the remarkable unwind here, almost to tomorrow. If we do see continuation in the stock market, it'll likely be a teens VIX again, and it is certainly going to be about a almost 50% decline here in about 2 weeks worth of trading in the VIX. So for some of you mean reversion traders, probably has your attention there as well to look for a little bid and kind of reversal on both accounts. So that I think covers everything there for the S&P 500 that I'm looking at. I'd still pay attention to 253 as a short-term level, but of course here we also have, if you're more active in looking at some of these downside levels, you have generally the slope here at which we have now been rising off of the lows that you could start to pay attention to, which again would coincide with around 253 on a potential breakdown. And then you just have this multi-day consolidation in here right around 250 or so if we started started to lose into that, then again, you probably want to pay attention to that outstanding risk you have on the table for the long side. So that is the S&P 500. Let's go to the IWM. This continues to lead here. It led to the downside back in the first downdraft in October and then mid-December, and now it's leading to the upside here in terms of magnitude. IWM getting a nice strong close, little bit better volume coming in here, but still more or less lower on this latest leg to the upside here. And again, this looks like it has room up to about this 145 area. That is where again, that breakdown really started to occur in mid to early December. In this case, for the Russell, that is where buyers were stepping up. We'll see how they feel when we get back up there. That's another couple of percent above where we're currently trading. Again, we don't have to get there, but it's certainly a level that the market seems like it's determined to retest at this point. NASDAQ 100, again, now also getting back in, and really it's already here in the NASDAQ 100. We're already back to some of this prior support where the market broke down from. 160 is pretty much where it was, and at the highs of today, we were testing it. So the Qs are already maybe our first kind of showdown here of how the market wants to react at some of these November, December levels. We'll pay attention to that into the next couple of days, and how these markets ultimately close the week, I think will be pretty interesting as well. So the NASDAQ 160 or so, that's what we want to pay attention to. Again, volume's been light, MACD trying to get back up into positive territory. So that covers really the major markets. Let's go to some of the other markets out there. We'll go to TLT next, which is down slightly here on the week. We talked about the fact that it was running into multi-month resistance in here around this 123 level. It continues to back off. We did see volume really accelerate, maybe some type of blow off here with the type of price action we saw back on January the 3rd. We had that swift gap down, and really we haven't been able to get back up and properly sort of retest the highs, if you will. We're really just kind of sliding lower, testing the more accelerated trend line, if you will, from recent times here in TLT. So looks like it may want to cool off. Maybe a breakdown here of this slope wouldn't be too surprising. We'll have to see what equities do. If equity market rolls right over, then maybe the bid comes back into TLT. We'll have to see. It's an aggressive short at this point because it is certainly counter trend. If we go to oil next, you can see this here is getting that lift to the upside, 3% move. So this is also helping equities rally here or stabilize, to say the least. Oil, of course, was crushed over the October, November, December, fourth quarter of 2018, and it is starting to finally at least just get back up to, once again, the scene of the crime of breakdown in December. It's where we started to consolidate here at the end of November, early December. We broke down and did that last leg into the end of the year. We're getting back up here, so maybe a move still continues until the 11:30 or so, get back up to the top end of this range, and then we'll see how oil fares from there. Extremely oversold conditions this is bouncing from, so perhaps there's a little more of a bounce here to be had. Natural gas finally, or actually we'll look at metals last. Natural gas still not really doing anything. The bleeding has stopped from the more severe downtrend, but really we're still in basically this downtrend that we've been in. We're starting to break above it today as we move sideways, but essentially, as we talked about in the last video, we completely round-tripped the epic move we saw in November, that big squeeze up to almost 40, all the way back down to 24. Quite remarkable in such a short amount of time. This thing's trading like a crypto or some other micro cap stock, which in fact it's actually the commodity natural gas, which is pretty crazy. But here it is going sideways. Maybe again, like oil, is due for a little reversion here back up towards the 30 area. Yet to be seen. The trend is still down, but a little bit of stabilization is happening. Finally, if we look at metals, GLD still kind of holding up, doing pretty well, working itself sideways more so than a pullback through price. Of course, that could change here if we start taking out say Friday's lows. Then this does open open it up to a bigger retracement. But for now, GLD is trying to hold up here, trying to keep that MACD holding high and tight. So bulls trying to fight and hold that control, and silver's pretty much the same situation here. We had that nice move in the end of December, broke above $14, got overbought, extended to the upside, but it's still holding pretty resistant up here near highs. I do like silver just from a setup, a more secure kind of base breakout that has happened. Silver looks a little more attractive to me here, and I'd be welcoming a pullback to perhaps get involved for a longer term trade. I like the fact it's over 14. As long as it stays over 14, it's kind of in my good list here for commodities. So that is it. That is what I have for the midweek video. Hopefully you guys are off to a good start. Remember, keep an eye out for earnings season, which will be starting, and you know, some of the other more macro headlines, which are certainly at play with government shutdown and trade and all that wonderful stuff, which could very quickly resurface to the negative side if need be. So do pay attention to your outstanding risk and understand where we've come from in this market bounce. So that is it for me. Thanks so much. You can subscribe on YouTube every Tuesday and Friday. We do market recaps just like this, or head to thetraderisk.com/blog. You can find all the videos posted there as well. Thanks so much. Talk to you in the next video.